thank you very much indeed for your contribution, and in particular for the opportunity to participate in the meeting this evening. I think it must be nearly 10 years since I last stood in this room and talked about China. It's fair to say that there's not much that I said 10 years ago that would be all that relevant to our discussions tonight. So much has changed in China since then, of course. The ACBC was mentioned, so I suppose I should say at the outset, having been chastised a couple of weeks ago at a talk I gave elsewhere, to say that the views and opinions that I expressed tonight are those of Ian McCubbin and not necessarily those of the Australia-China Business Council. Someone took exception to something I said the other night, so that could be understood. China, of course, is well on the way to becoming the largest economy in the world and has become Australia's most significant trading partner. But as has been foreshadowed, perhaps if you could please forgive me tonight if I don't make copious and presumptuous assertions about the global importance of China's economy and the so-called opportunities presented by the rise of China. There's plenty of others who are very willing and able to discuss those issues. Rather, I thought I'd like to pick up on the debate that's been sparked by that single sentence in the opposition leader's recent speech to Auscham in China, to the effect that it would rarely be in Australia's national interest to allow a foreign government or its agencies to control an Australian business. And I suppose also, to a lesser extent, the Coalition's draft policy paper on foreign investment, which, as you know, relates largely to agricultural investment in this country. Followed it. I thought we'd ponder perhaps the state of the bilateral trade and investment relationship between Australia and China, and in particular the way in which we've thus far, we in Australia, thus far dealt with investment by China, especially by China's state-owned enterprises, and what it means for future investment. I think we should also perhaps have a look at the ambiguous character of those state-owned enterprises, which causes so much angst for the government and opposition alike, and what this all means for our future relationship with China. If, as we all expect, China is the driver of the Asian century, as we hear in so many talks like this, has Australia already missed the boat? Have we already compromised the opportunities that supposedly await us? Will China's monumental, and it is monumental, outbound capital flows continue to go elsewhere, to places that the Chinese at least perceive to be more welcoming than Australia? Having said that, I'll focus on the investment relationship tonight. Perhaps if I can make it clear at the outset, I'm very happy to take questions on any aspects of the China relationship, and I'll have a go at answering anything that you might like to throw up later, including Aussie life. Not that I have the answers. 3 years or thereabouts ago, having just completed a presentation in Beijing entitled "Making Investments in Difficult Jurisdictions," covering places like Democratic Republic of the Congo, Kazakhstan, Sudan, some of the places that China was beginning to look at in terms of investments. As is customary, I called on the audience of over 200 senior executives of China's major state-owned enterprises for questions. No sooner had I made that request than a lady in the front row, who I happen to know was one of the big oil and gas companies in China, immediately thrust her hand skywards like an over-enthusiastic primary school child. I have one question, she said. Why didn't you talk about Australia? We think Australia is a difficult place to invest. Now, if that question threw me, then the resounding murmur of assent that went around this large auditorium, representing all of China's major state-owned enterprises, absolutely left me speechless. I realised at that point that this is a significant issue in China. At that time, I was regularly accused of being rather alarmist when I expressed concern to government ministers that we risked taking China for granted. Certainly risked access to its development capital. The response was pretty much universal, and you could guess what it would be. They need us more than we need them, was the response that I kept hearing. I was even told by one senior diplomat, "You've been brainwashed by your client's propaganda." Today, I think there are not many people who would be so brave as to make such an unequivocal statement. China needs us more than we need them. China has choices. China may well require natural resources like coal, iron ore, and oil and gas, but it no longer needs or is driven by the need to make vast investments in Australia's resource projects, especially greenfields projects. In recent years, the law firm from which I've just recently retired has advised on Chinese investments in just about every country on continental Africa. Far more than we've seen in Australia. Last year, again, just to give a flavour of the way China is thinking, last year, the China Development Bank, which has funded and continues to fund many of China's major projects around the world, fund the state-owned enterprises. China Development Bank posted the governor of its largest branch, central branch in Beijing, posted Governor Zhao, not to Sydney or to Perth, but to Brazil, because that's where China saw its immediate future for resource project investment in priority to Australia. In short, Australia's investment relationship with China has undergone an almost imperceptible, nonetheless significant shift over the past 4 or 5 years. Sadly, I would submit, reflective in part of the changing nature of the bilateral political relationship. Indeed, today, respected China commentators, including even our immediate past ambassador to China, are expressing serious concern at the current state of our bilateral relationship with China. So how's this come about? Well, we're told that Chinese investment into Australia has not slackened. Government ministers, bureaucrats, diplomats like to point to the raw number of apparent Chinese applications to the Foreign Investment Review Board as evidence that China has not lost its appetite for investing in Australia. I think the reality is otherwise. Foreign Investment Review Board, FIRB, quotes something like 9,770 foreign investment applications in 2010-11, of which 5,033 were said to be Chinese. But the value of those Chinese applications was still less than those, for example, from the UK. Indeed, FIRB itself confirms that many of private acquisitions are less than $1 million. Importantly, the number of FIRB applications by Chinese invested companies in which China's invested, is exaggerated despite some regulatory changes recently. This is because for a long time, any Australian company with 15% Chinese SOE shareholding was deemed itself to be a state-owned enterprise of the People's Republic of China, and thus required to lodge FIRB applications for all acquisitions of assets, regardless of the value. We had to lodge FIRB applications to buy a shop in Western Australia to you know, or an office, I should say, you know, commercial property, regardless of the value. Take a company, for example, like Jindelby Metals, listed on the ASX, with hundreds of mums and dads, Australian shareholders. It has a 50-50 joint venture with China's second largest steel producer, a company called Angang. But as a result of a share issue, brought about by reason of the fact that the Australian part of the joint venture, Jindelby, was required to commit its part of the equity capital to the joint venture, so it wasn't able to do so, so the Chinese lent the money to the Australians, put the money in, keep the 50-50 national joint venture. As a result of that share issue, Ansteel's interest in Jindelby exceeded 15%, and thereafter Jindelby was deemed to be a Chinese SOE. Thereafter, every asset, as I said, every asset acquisition by Jindelby, even unrelated to the Chinese joint venture, required FIRB clearance. So the numbers are exaggerated. So this process greatly exaggerated the perceptions also of the level of Chinese investment, overstated the relative impact of Chinese investment compared with, say, the US or Japan, Korea, and sparked reactionary negative public opinion, which persists, especially as we've seen in the context of farmland, and is to some significant extent, I think it has to be said, a catalyst for the recent coalition paper on foreign investment in farmland. The reality is that the headline resources deals, especially by China's flagship SOEs, are now few and far between compared to a few years ago. How is that? What has happened since Sino, China National Offshore Oil Company's then record-breaking investment in the North West Shelf LNG project, which kicked off a wave of sort of large-scale projects? I think it's instructive to look back to modern China's first forays into Australia. My own first professional exposure to China's investment in Australia was in the mid-1980s when a company called CITIC Australia, China International Trust and Investment Corporation, invested in Alcoa's aluminium smelter in Victoria, in Portland. Round about the same time, another company now known as Sino-Australian invested in the Mount Chanar iron ore project in Western Australia with CRA, as it then was, Rio Tinto. Those two investments, for many years, were regarded in China as amongst China's most successful global investments, not just in Australia, but globally. I say strangely because China's investments at that time were largely political. They were driven by relationships between Bob Hawke and his counterparts at the time, and they were often negotiated with little due diligence on the China side. Bear in mind, of course, some might say it was China was something of a nirvana in the sense that at that time there were absolutely no private lawyers in China at all. The lawyers were simply the people who were brought in after the real business was done. They were dragged into the room, told to commit the deal to writing, preferably in less than 2 pages, and that was the role of the lawyers. So there was very little due diligence, but they were successful investments in Australia. There followed a hiatus through the early 1990s in which we spent most of our time working with the Chinese government to develop new laws for the transition in China from a controlled economy to, I was going to say, a free market economy, sort of free market economy. At that time, China and its enterprise simply didn't have the capital to be making broad investments outside China. In fact, most of you recall at the time, a flurry of joint ventures in China, foreign companies rushing into China to form joint ventures and throw money into China. If you ever read that book, Mr. China, for example, knows exactly what's happening. New York setting up investment funds, they all rush in and they put money into state-owned enterprises, and of course, for the most part, wasn't all that successful. The point was that the goals of the investments, those investments in Australia, were not profit related. They were to particularly gain international acceptance, put China onto the world stage, to get access to, and therefore get profile, to get access to Western management and technology. But frankly, that stage the Chinese government had little idea of the drivers of a free market economy. For example, I recall I was asked to advise the Chinese government on the development of a new anti-monopoly law, effectively like a Trade Practices Act for China, and it was all a bit surreal because at the time, these laws are based on generating competition in the system. At the time, though, basically the Chinese government was going around China taking thousands of small state-owned enterprises and putting them all together to make these huge monolithic state-owned enterprises, most of whom were probably technically insolvent anyway, with the idea that these big enterprises, and they became of course big monopolistic enterprises, but for the purpose of being able to deal on an even basis with Western companies. That was the intention. So here we were trying to develop trade practice and anti-monopoly law, while the government itself was pursuing extremely, clearly monopolistic processes. That was the sort of, but that's what China was doing, and it was all, as I say, a little surreal. We'd be, and just to give you a flavour of the state-owned enterprises, and I'm going to come to what sort of enterprise they are now compared to what they were then. But we'd go into a state-owned enterprise at that time. I was probably representing one of these funds that was going to invest in the state-owned enterprise. We'd go in and you'd sit down with the chairman and the senior management of these state-owned enterprises, and say to them, now, Chairman Wong, tell us a bit about your company. Well, he'd say, we employ 30,000 workers. We have factories covering 100,000 square metres, if that's a big amount. We provide housing and healthcare for all our staff. We pay $1 billion in taxes every year. We have 4 certificates from Deng Xiaoping on the wall to say that we're an A-class factory company. That's excellent, you could reply. That's very impressive. How much profit did you make last year? We hope to make a profit next year. But that was the nature of the organisations which were the forerunners of the state-owned enterprises which have been investing in Australia, with which foreign governments or non-China governments have difficulty dealing. In fact, in 1997, the Chinese government approved the listing on the Australian Stock Exchange of what was at that stage the largest cement producer in China. I guess it took 1997, so what's that, 15 years? It's not that long ago. All I know is we walked up and down the streets of Sydney and Melbourne and could not find anyone who was prepared to underwrite the listing of the largest cement company in China. As you probably know, since that time, well, they say more than half the concrete poured in the world has been poured in China, but no one wanted to know about a cement company from China. The problem was that at that time, the Chinese government fixed the prices of cement. And so whilst these were huge, this was a huge company, and obviously doing tremendous business all over China, the government determined the profitability of that enterprise. And whilst that remained the case, then it was not really suitable for listing on a market exchange like the ASX. All the same, that's how our attitudes have changed. But have the state-owned enterprises changed? I believe they have. I think they finally learned that what works in China doesn't necessarily work in London or New York or Melbourne for that matter. They've learned that strong regulatory institutions in mature markets like Australia cannot be controlled by high-level political intervention. Well, as you can imagine, many's the time over the years that we've been asked to set up meetings with the Prime Minister of the day or whatever to try and fix some problem that a Chinese company was experiencing in Australia. They're also learning, sometimes the hard way, perhaps paradoxically, from what I just said, the importance of influencing public opinion. We have to look at a transaction like the Rio Tinto and Sino-Australian deal to see that maybe the Chinese party wasn't really as sophisticated as other parties in the way in which they dealt with that situation, and there are many other examples of that. But from 2003 to 2009, there was a raft of landmark investments that ushered in a new era in the bilateral relationship. The Min Metals and Oz Minerals, Young Coal and Felix Resources, I mentioned Jindabyne before, and Ansteel, and the first successful hostile takeover in the world by a Chinese state-owned enterprise, Sino-Steel's takeover of a company called Midwest Corporation. It was a deal that seemed to say to the world, China's SOEs are now international corporations capable of mixing it with the best in global markets. So, despite what I just said a moment ago, Chinalco's initial raid in London on the Rio Tinto share seemed to confirm that the SOEs had largely cast off their political role, at least in the way that they were motivated to do this. These deals were largely commercially inspired, albeit backed by Chinese government policies that encouraged state enterprises to go out, as it was called, go out into the world. And secondly, and critically importantly, almost inexhaustible finance from China's banks, especially the policy banks like the China Development Bank I mentioned before and the China Exim Bank. Behind the scenes, the Rudd government struggled to deal with the definition of national interest, which of course is the only test, in fact, for foreign investment review in Australia. Struggled to deal with the definition of national interest in the context of the Chinese state-owned enterprises. The problem was, and I think still remains to this day, that the words state-owned enterprise or even sovereign wealth fund appear nowhere in the Foreign Acquisitions and Takeovers Act, which is the act which actually regulates foreign investment in this country. During this period, the Chinese would wait months for a response on FIRB proposals, months, despite the fact that the law actually said that the Treasurer was required to make a decision within 28 days or it was deemed to be effectively approved. What would happen is, on day 27, we'd get a call from FIRB asking us to withdraw the application and re-lodge it again so the 28-day period would start all over again. This happened constantly, and as you can imagine, was extremely frustrating for Chinese investors because they couldn't apply for their own approvals in China until the Australian government had given the all clear. And despite the Sino-Steel deal, you can imagine trying to operate in a competitive market environment where there are these sort of delays in place. It made it almost impossible for the Chinese investment. It was very frustrating. It was also very confusing. You know, we'd be told in one breath that the government preferred genuine joint ventures, but in the next breath that the Chinese could not acquire more than 49% of the target company. So is a 50-50 joint venture not a genuine joint venture? These are the sort of things, and you try explaining that, despite the language barrier, you try explaining that to, you know, a large Chinese enterprise wanting to invest billions of dollars in this country. And as far as the 49% was concerned, well, that made no sense at all because you can't really bid for, Henry here in front row, but you can't really bid for 49% of a company because once you pass the 19.9 limit, the takeover provision cut in, you've got to make the offer to all the shareholders. There are some exceptions to that, but generally speaking, that's the principle, of course. So basically, a 49% cap by FIRB was a 19.9% cap. And the frustrating thing was that neither FIRB nor the government seemed to understand that. The other thing was, apart from not only a lack of clarity and consistency, it was compounded by the delays. Time and again we were told by FIRB that applications were waiting in the Treasurer's office. And then we go off to the Treasurer's office, and that's fair enough, because the Treasurer is the person who's responsible to make these decisions under legislation. But we'd go to the Treasurer's office, we'd be told by Treasury that the application was awaiting a decision higher up, which we took to mean Prime Minister Rudd's office. For the Chinese, this was a far cry from their almost euphoric response to Mr Rudd's speech to President Hu and his team at the APEC conference in Sydney, where he won prolonged applause for his speech in Mandarin at that luncheon. And the Chinese look forward to a wonderful age of dealing with a Prime Minister who of course could speak such proficient Mandarin. Many of these issues began to disappear with the change in the Prime Minister, not surprisingly, and the advent from the decisions of the Treasurer that tacitly acknowledged that existing laws and regulations could go a long way to address the concerns about the related party conflicts. This was always the issue. It's not in Australia's national interest for a Chinese investor to be both the major shareholder of an Australian resources company and at the same time be the major customer for the company's offtake. That made perfectly good sense to be concerned about that from a national interest point of view. I have no argument with that whatsoever. But the thing was that there already were laws, listing rules in place which are designed to deal with that very situation. So, for example, under the listing rules, situations where the Chinese would not have been permitted to vote on a particular issue in which they had a conflict of interest. And as I said, the situation became a little better when, with the change in the Prime Minister, it appeared to occur at that time, so that not only did we get quicker decisions, but the conditions that were attached to those approvals, technically the correct word, but the approvals, started to make more sense. So you had this situation with a company called Yancoal, where China's big coal companies, which was required as a condition of approval to ensure that the target company, Felix, was relisted on the stock exchange within, I think it was 3 years, but within a period of time. This to me made a lot of sense. And at last we started to get things right, and I think we have got things right from that point of view over the last few years. At that time, the Treasurer also released a set of principles governing the national interest test of national security and effects on competition, effects on taxation and so on. So we started to get a little bit more clarity around what was happening. The problem is that investment decisions, of course, can be driven by perception and misapprehension as much as reality. And the Rio Tinto Chinalco stalemate, as it was for a period of time, only served to entrench the view in Beijing that Australia did not welcome Chinese investment, no matter how many government ministers have since made the journey to Beijing to tell them otherwise. For the Chinese, I believe that the damage had been done. By this time, the Chinese unequivocally saw the Australian government's policies as discriminatory against its SOEs. Now, I'm not saying they were. All I'm saying is the perception in Beijing was undoubtedly, still is to some extent, that Australia discriminates against investments by Chinese state enterprises. And remember, these are the same state-owned enterprises that queried why I had not included Australia when I talked about the Congo and Kazakhstan and the Sudan as a difficult jurisdiction. More importantly, coming to the present and the future, I guess, more importantly, these are the same enterprises that will spearhead innovation in China, future economic growth in China, especially under the incoming leadership. Of course, then came issues such as the mining tax in its various forms, which again, despite protestations to the contrary from the government, were regarded by the Chinese as a genuine sovereign risk issue. They can live, you invest, there are risks associated with investing offshore for any company. You can deal with small changes in rates of tax. This was a new tax that hit projects where China had already actually spent hundreds of millions of dollars, in some cases billions of dollars, now committed to those projects. So they saw it as a sovereign risk issue. There's the issue of the carbon price. I don't personally think that's going to be a big issue. I don't think that's going to be decisive for the Chinese companies, but we'll see. Again, far more relevant today in the context of China's attitudes towards Australia, particularly for investment, far more relevant today are the project-specific issues. I mentioned Ford and Steel. Sino-Steel and Steel have committed billions of dollars into Western Australia's Midwest region around Geraldton. They now face the prospect of having no railway or port to move the iron ore, to ship their iron ore. After spending hundreds of millions of dollars, Sino-Steel's major project has effectively been mothballed because it was delays in terms of the Okajee port being built, and goodness knows if it will be built. It's unclear, in fact, whether it will ever be built. How did this happen? Well, given the extent of China's commitment to developing magnetite ore projects in this vast region, this Midwest region of Western Australia, it was simplistic, if not naive, of the previous Western Australian government to nominate a Japanese-backed company to be responsible to develop the rail and port infrastructure. These are the sort of bureaucratic political decisions that have perplexed the Chinese, because basically nothing's happened. It's supposed to be built by, I think, this year, might have been, or next year. It won't be. Problems with port infrastructure in Queensland are well documented. Of course, not all of the problems are outside China's control. Shenhua sought to convert prime farmland to coal mining in New South Wales and ran into trouble. A company called China Metallurgical Corporation has a lot of problems, a lot of litigation, and CITIC Pacific Sino-Iron project as the project costs have escalated way beyond what could have been foreseen. All of those companies would probably admit to some contributory negligence on their own part to affect their projects. However, the net result today is a pervasive view amongst the major SOEs in Beijing, state enterprises in Beijing, that Australia is a seriously difficult place to establish major projects. Of course, time will tell if this view is shared across other industry sectors like agriculture, chemicals, tourism, education, and of course telecommunications. But it's hard to imagine that the resources projects are likely to be the only ones that are influenced by these perceptions. The proposed acquisition of one of Australia's largest cotton farms has been plagued with difficulties that don't augur well for future Chinese investment in these other sectors. And of course, cases like the exclusion of Huawei technologies from the NBN, whether justified on national security grounds or not, simply reinforces the perception in Beijing that Australia does not respect the legitimacy of Chinese intentions in Australia. Poor Keating made that point, I think, in the last week or so. And of course, I haven't even mentioned the Defence White Paper or some of the exceptionally strong pro-US pro-US comments from people like Mr. Rudd and Mr. Beazley, which of course don't escape the notice of the Chinese. In short, I think Australia has not really helped itself over the past few years. The point is that the competition for Chinese capital for major projects from other investment destinations is intense. I see it in Beijing. Over the past few years, I've spent more than half my time actually in China, and I see what other countries are doing to try and attract investment. It's intense. In such a highly competitive environment, Chinese state enterprises may well simply take their bat and ball and go and play elsewhere. And of course, the more they spend on developing projects in places like Africa, the more those projects come on stream, the less reliance they have on our natural resources. That's not to say there'll be no investment. The Chinese burgeoning private sector will undoubtedly be active. Until we understand a greater appreciation of the importance of Chinese capital flows to this country over the next decades, we run the very real risk of missing what should be a substantial role for Australia in the Asian century. As Australia's largest trading partner, the reality is that investment from China is still relatively modest. Our own investment into China is almost non-existent. Make exceptions for the financial services sector and others, but in real terms, it's almost non-existent. Australian companies commonly plead lack of market access, but in my experience, the reality is that there's simply little appetite for significant investing in China. Chinese regulation, especially intellectual property infringement, continues to dissuade many Australian companies. But the point is that US, European, Asian, especially say Japanese, Korean, Singaporean corporations have not been so shy, despite facing exactly the same regulatory environment in China that Australian companies face. For a lot of those companies, their Chinese investments now underpin their global profitability. For the Chinese, I mean, it's one of the, you've only got to look at the free trade agreement, for example, how difficult an exercise that's been to pursue. I note the time, so before we go to questions, perhaps I just say one can only hope that Foreign Minister Carr's new era of bilateral engagement, his commitment to renew, recommit and refresh the relationship is more than just hollow words. I think what those words tell us is there is a problem. There is a problem. If there's no problem, you don't need to be talking about new eras, renew, recommit, refresh. There is a problem with our relationship. Australia can either embrace the Asian century, or I think face the prospect of being left behind the rest of the world. I might stop there. It's 7:05. As I said at the outset, I just thought if we could focus, just have a think about what's going on and the debate around Chinese investment in Australia, have a look at the history of it, have a better understanding of what's no doubt going to become an ongoing debate in this country about how we deal with Chinese state-owned enterprises. But I'm happy to take questions on any Chinese topic.
Well, thanks very much, Ian. I think that opened up an area that's probably very little understood in Australia, and I think we're very grateful to you for having done that. Okay, where are the questions? Yes.
Michael Council Member. there was recently a program, I think it was on Al Jazeera, where a Philippine fishing boat went to, I don't know what the area was in the South China Sea, got chased away, got told to rack off by a Chinese military vessel, told them this is the People's Republic of China. They're at lead, and then they sort of dawdled for a while, and then they were told in certain terms to leave, and they left. Now, when they showed the map, it was a lot closer to the Philippines than it was to China, and apparently it's a very good fishing ground. How will the South China Sea territorial disputes with all of the countries there? How is that going to resolve? How is that going to develop? I mean, do you think that the other Asian countries will just basically just give up and let China assert sovereignty on it? Do you think it could lead to even a military thing? Where do you think it will go?
I think it's a serious issue. I think South China Sea is a serious issue. I don't think it's just the other directly involved Asian countries that will be critical of the outcome of those are flashpoints. I use that word. I saw Hillary Clinton quoted in the last couple of weeks of saying that that the US, wouldn't allow China to unilaterally militarily take over the various islands, the Spratlys and others that are important there. China has not shown itself to be geographically expansionist, and I mean they will say that, and I think that's an issue. They will also, of course, argue that they have historical grounds for claiming those islands in the South China Sea. I think the other thing that we need to bear in mind, and it opens up a whole new issue, and that is the role of the military in China. The military is still very important in China, and I think that there is an issue around national sovereignty and national pride and that sort of thing, which is quite important. I think it's probably too early to make a judgment about South China Sea, though. I think it'll be very interesting to see what changes of policy broadly flow from the change of leadership. There's always this question of, the incoming leadership effectively, going back over 3 or 4 years, there've been increasing factional disputes, and my Chinese friends would tell me, look, no one's going to make a decision about such and such an issue at the moment because no one wants to commit. Everyone's hanging back because there is some factional tension in China between what is now the new leadership and also pro-continuing the reforms in China, and the group associated with Bo Xilai, which was moving back to the principles, trying to go back to the principles of the Communist Party and reinvigorating, I suppose, the Communist Party's role in day-to-day life in China. And I think that and I guess we've a pretty fair indication of which direction, who are the winners and losers out of that factional dispute. But I think it'd be interesting to see how the new leadership actually deals with those sort of issues. But it's likely, I think, that Hu Jintao continues his role with the military. It would be very interesting to see the tensions that arise there, and the way in which China deals with those issues. But I think that it's a genuine area of concern for the region.
Yep.
Hi, and I'm Troy from RMIT. I was just going to ask, could you compare China's rise to the way Japan was viewed in the 1980s, the new rising Asian tiger, and then it just petered out before it got off into a superpower? Could China be compared if, say, an economic downturn happened? Could that be the same situation?
I'm sure you mean in relation to its relationship with
Sure.
Australia.
Yeah.
Because in relation to its relationship to it, it's interesting that I mentioned the Foreign Acquisitions and Takeovers Act before. There's no mention of state-owned enterprises or sovereign wealth funds, but there are a lot of sections in that act which deal with investments particularly into residential property, that flowed directly from the Japanese perceptions about Japanese investment into residential properties in places like the Gold Coast and so on many years ago. I don't expect that we will see China's growth and development peter out. I don't think that'll happen. I think if you look at the numbers and you look at, if you look now at China's development in the context of a lot of numbers. I'm really sceptical about per capita numbers in China, because you've got 400 or 500 million people who live effectively in poverty in rural areas and so on. You've got this mass transition to urban areas. So people like to say, well, China must be going to grow because there's only one car per 1 squillionth of a person in China, so look at America and everyone's going to own 6 cars. I don't think that's very helpful in terms of looking at what China's likely to do. But if you look at the capacity for China's domestic economy to take up any fall off in what's happening in terms of China's export markets, you realise there's quite a way to go. And the Chinese government, I think, has handled its economy remarkably well. There have been people preaching about, what's his name, Rubini, I've heard him speak in China, one of these sort of Dr. Doom economists to talk about China. But there have been people talking about the demise of China's development for a long time, even going back to, well, the figures are all rubbery, and who would have 6 or 7% economic growth? Of course not. But I think now people realise there is this, there is tremendous demand in China, and they've handled their economy remarkably well. People now think generally commentators will give them, other governments give them credit for what they've done. But there are huge problems in China. There's huge problems. And you've probably heard them all quoted before. The demographic is a huge problem. The workforce is going to start to fall in the next few years because of effectively out of the one-child policy. You've got an ageing population, which is why people say China's got to get rich before it gets old. It's an ageing population. Divert just for a moment, just on talk about the one-child policy. Put people in the room who have been part of that. But what I have observed over the years in relation to the one-child policy is, okay, so no child has a brother or sister, so they're brought up as only children. But that's only part of the story, because as the generations have gone on, children not only do they not have brothers and sisters, they don't have cousins, because their parents were only children. So they don't have cousins, they don't have aunts and uncles. And we can all, in terms of what our experience generally here in Australia has been, the important role that an extended family, I guess horizontally as opposed to the vertical relations that comes in China with grandparents, parents and the child, the sort of social support that presents, I think we're starting to see in younger generations in China some of the impact of the one-child policy in social areas, lack of socialisation of generations coming through now. I think that'll be a big issue for China to be able to deal with it. You won't find much written about it, but I think it's going to be a challenge for China.
Ian Reid, member. You indicated that Australia hasn't been very welcoming to investment from the Chinese. Do you think that was right? In what way should we have adjusted it to get a better reception from China? And what are the risks that you see, having worked with them for a while, if we had just backed off and said, well, come in and treat us like Africa?
I don't think it's. Thanks for the question. It's a really good question. But I don't think it's a question of even necessarily saying in black and white we should have approved certain things or we should not have approved certain projects, because in fact, in the upshot, many of the projects were approved, and you had Minmetals where they carved out, you know, the major asset, in fact. But ultimately, the proposals, when I say they were approved, they were not blocked. But it was the process that we were going through. It was the lack of clarity, and the impression that the government actually hadn't formulated the way in which it would deal with these state-owned enterprises. And so I think the Chinese would accept without question that Australia has a right to assert its national interest in relation to projects. I mean, the proposed Shell takeover of Woodside that Peter Costello, I think, blocked, and you can put together an argument as to, you may not agree with it, but you can see that there is a rational argument about that sort of situation, you know, might not be approved. You might even be able to put together an argument that says certain proposals from China ought not to be approved, you know, whether it's Rio Tinto or whatever. But it's just the way it was handled. And the Rio Tinto case went for months, where there was just no decision, and effectively, what the government was saying is we'll let the commercial, you know, the markets deal with this, and they did in the end, without actually making a decision. And that's what was happening. It was the lack of clarity about, well, you know, what is it? If you are, you know, I went to meetings. Remember one day going to a meeting with Simon Crean up at Parliament House, and you don't have anything to worry about with this particular transaction, as long as it's going to generate jobs. Well, we're spending billions of dollars to develop this new project, not there at the moment. It's not going to compete with anything else that's being done in Australia. So if you're creating jobs, you won't have any problem. And I literally went down the hill to Treasury, from Parliament House down the hill to Treasury, sat down with the senior people in the Foreign Investment Review Board, and they said, well, we don't care about jobs. All we care about is the potential conflicts of interest. And so, I suppose what I'm saying is, if it was clearly spelt out, you know, these are the issues about which we're concerned. And if the responses had been clearer, I think the Chinese would have accepted that. But, you know, too often decisions were delayed for unacceptably long periods, and then when decisions were made, you know, some of them sort of really didn't make much sense. I think it's changed. I think Ferg was under-resourced. They didn't have the resources to deal with these major projects that came in. But and I think they're now much better resourced. Just querying whether we're not a bit late, because not only because the Chinese don't perceive us as being a difficult jurisdiction to get major projects up now. And if you look around the projects in which they're invested, there aren't too many that are really going well. But it's not. Yeah, it's not just that. It's the fact that for the Chinese, time's moved on too. They're going elsewhere.
Yes.
My name is Yun Sriong. I'm not going to speak about anything to do with business, but I want to tell you a parallel case with education. I think Australia has missed the bus in this. I taught the first group of Chinese academics from Nanjing University English, the first group to go overseas in 1980. And I could hear at the university, which is about the fourth university in China, I heard a lot of American voices in the campus. And I found out that America already had an agreement, a bipartisan agreement, that Chinese and the American students would be exchanged from Wisconsin. I think that is part of Berkeley. So I was very upset about this because there was not an Australian voice at all to be heard. And when I came back to Monash, I spoke to the Dean, who was also a member of this association, and he called a meeting for all people who would be interested in finding some sort of exchange between Australia and China. 3 professors turned up at the meeting, and one of the things that was said to me was, but we don't know anything about Nanjing University, we don't know what the standards are. And I said, well, if it's good enough for Wisconsin, surely it's good enough for Monash. But it failed, and that was 1980. Now we have about, I think, 30,000 Chinese students studying here, and at last, I believe Monash is going to open a university in China, but it is miles too late, I'm afraid. America is well and truly entrenched there, and so are all the other European countries.
Look, thanks for that. I think that's really, those sort of perceptions that were expressed to you about it in Australia, I think are sadly, I think it's still around in some quarters. You see it sometimes with some policy development in Australia, but I mean, I think that you know, it's just that lack of understanding, and there's certainly a lack of understanding about the nature of the state-owned enterprises, which are largely now pretty commercial. They still need to get certain approvals for so happens. But it's a fair point.
Yes.
Hello, Jacqueline Banky, ex-council member and institute member, and currently living and working in Suzhou, right next door to where Monash is about to cut the ground, in fact. And they're opening up a graduate school. My question to you is, with the coming of the new era of leadership in China, do you see that there really is a possibility of actually recommitting and refreshing the issues that you brought up this evening? I also see that there are, as you say, American and European companies right where I live, but there's hardly any Australian company actually doing any investment in Suzhou, which is literally the sister of Shanghai.
I don't see any change, any massive change in the attitude of Australian companies to investing in China. Financial services companies is an exception. I think our service industries like engineering and design and so on have been fantastic. They've done it world class. But I don't think we'll see I think it'll be a while before Australian companies really are prepared to make substantial investments into China. But I think the more broad point that you make, with the new leadership and so on, can we improve? You can always improve the relationship. I mean, there are government ministers now who would disagree with my comments tonight. They'd say everything's fine, but the reality is, Prime Minister Gillard, I think, has made one or maybe two, maybe a second brief visit to China. We have ministers go up there, but when you get Jeff Raby, he's just returned from China saying we've let the relationship slip. We have taken China for granted. Then there's a problem. But these things can always be addressed, but on certain things, and I was going to talk about investment tonight, but on certain things, it's hard to change entrenched views. Now, there are a lot of Australian companies that wouldn't touch China because you may remember many years ago Foster's made an unsuccessful investment in China, and that coloured the thinking of Australian companies for years. This becomes folklore, and Chinese companies, that's the way they think about Australia.